Hi traders, and welcome to another edition of Trading Tips. I'm Jared Levy, your host, and this session is brought to you by firsthourtrading.com. Check them out. In the first 59 minutes of trading, these guys will teach you how to make enough money to take the rest of the day off. firsthourtrading.com. Today's session is all about prepping for earnings. We are on the precipice of Q4 earnings releases in 2014, but this information will carry you through a long period of time. It's good whenever. Let's take a look at just how I get ready for earnings season. All right, so let's get started by taking a look at Outerwall. The stock symbol here is OUTR, and basically I'm going to walk you through the analysis that I do just ahead of a stock's earnings report, both to get an idea of the direction it might travel during earnings and also to get an idea of just how volatile the stock tends to be over earnings. Here is the chart going back. Let me zoom out for just a second here. Here's a stock obviously going back about a year's worth of time. You can see there are some icons here on the bottom. This, by the way, is the Think or Swim platform. You guys can find this information on many chart packages. I'm just happening to use this one. And what this does is it tells me when they report earnings. We're going to come back to this chart in just a second. Before I get into the charts and get into volatility, I want to talk for just a second about some of the fundamentals that you want to look for. And for that, we're going to take a look at another screen. This is Zacks.com. This is a free website. All the information you're viewing here, you can go to Zacks.com, click on the website, and you can find that information just as well. All right. What I've done is I've typed OUTR in the quote box. I've clicked on detailed estimates on the left-hand side. All right, just to show you guys how I navigate here. And we're going to go through some details. First of all, the most important thing is when. When does this company report earnings? Well, it looks like the 6th of February is the next earnings report date for OUTR. Now, I picked Outerwall because it's a stock I know. Outerwall was formerly Redbox before. And, you know, it's a stock that sort of is in the middle of a little bit of a conundrum. And the conundrum being is, well, it's a stock that supplies mainly DVDs and Blu-ray discs via their Redbox kiosks around the country. And we all know that with the digital age and being able to watch movies on your phone and mobile device and at home via companies like Netflix, that, you know, Redbox might be struggling. But at the same time, they also own Coinstar, and they're also looking to expand their online business. They've got Redbox Instant, which is a joint venture with Verizon. So there's some interesting things happening here with OUTR. The bottom line is it's all about earnings. So we know they report earnings on the 6th. If I'm intending to hold the stock through the 6th of February, okay, which is just a couple weeks away, I need to know some information. First off, we've got the date. The second thing I want to know is just how expensive is this stock? In other words, if I'm looking at a particular stock I'm going to hold through earnings, how expensive is this stock relative to both of its peers and to the broad market? And for that, I just take a quick glance at price to earnings ratio. Here we see it's just less than 12. Not terribly expensive. The S&P right now trades at about 16 or 17 times forward earnings. So this is relatively cheap, and obviously it's cheap for a reason. The next thing I do is I generally take a look down here at what's called the agreement. What are analysts doing? Are they upgrading the stock? Are they downgrading the stock? Here I want to see what is the consensus sort of feeling amongst analysts. And you can see that really over the last 60 days, it's been nothing but upgrades for OUTR. There have been no downgrades. Generally, I want to see a majority of upgrades versus downgrades if I am bullish. Again, what I'm doing now is I'm forming a direction. I forgot to mention this earlier. If you scroll up here, another really easy thing that I like to glance at is the Zacks rank. It's a number 2. Anything 3 or better, if you're bullish, is a good thing. A 4 or 5, which are sell and strong sells, those would be good if you're bearish. Again, getting an idea of direction. Now let's look at one more thing in these fundamentals, and that, my friends, is what we call the ESP. On Zacks.com, again, this is all free. It's just a little sort of tool that I use. If this number is positive, and if it's a Zacks rank 3, 2, or 1, which means those are all good, then there is a likely chance that this stock will beat its earnings estimates. So again, if I'm a bullish trader making an investment here in OUTR, and I've done my checklist, I've seen that the price to earnings ratio is fair, analysts are making mostly bullish predictions, and the ESP is positive, then going into the earnings report, I can feel comfortable that there's going to be a bullish bias. Now, obviously, if the ESP was negative, and if it was a Zacks rank 4 or 5, and the price to earnings ratio was 20 or 30 or 40 or something like that, then I might be more inclined to look for a bearish trade, or I might be more cautious if I'm a bull. Let's go ahead and take a look back at the charts here, and let's go through some of the exercises that I use to gauge just how volatile the stock is going to be. Now, you could see back here in October, the end of October, they reported earnings. There's that little phone call icon. You could see they reported earnings of 97 cents. The quarter before that, they reported back here in July, they reported $1.91 per share. What I'm going to do here is I like to look at the movement basically the day before and the day after earnings and see just how much the stock traveled. So I look at the high, in this case it was around 65, 61, and then after the report came out about a day later, the stock traded down to 55. That's about a $10 move the stock made in the course of 2 or 3 days. That was 2 earnings reports ago. If you take 65 and divide by 10, the dollar amount of the movement, you get what? Roughly 15, 16%, somewhere in there. So, or actually a little bit more than that. Gosh, let's take, yeah, no, that's about right. Let's call it about 16%, 17%. Okay, so there's the first calculation I've done. The next thing I'll do is I'll look at the last earnings report. And generally I like to go back 2 or at least 3 earnings reports and see just how volatile the stock tends to be. Last report, the stock was around 61. 2 days later, it made it up to 68. Okay, so let's call that about a 10% move. If I were to average out the moves on OUTR, and I've done this, they've averaged about 13% or so over the past 3 earnings reports. And again, you can go back and look, as far back as a year or more if you really want to get an idea of just how volatile the stock is. So going into this, I know there's a fairly decent chance that this stock can move, about 13% over earnings. With the stock trading at $69 a share, right, again, just do your math. You take 69, multiply that times 15%, and you get about $10.50 somewhere in that area. The point of this exercise, guys, is that I know that I've got to be prepared for a potential $10 or plus move in OUTR on the 6th of February when they report earnings. If I just bought 1,000 shares of this stock, I've got to be prepared for a $10,000 plus move over earnings. If that's too much for you to handle, then it might be advisable for you to scale back your investment. Now, granted, I've done my homework. I've looked at their fundamentals. I've checked the news. I've checked the, in this case, I used the Zacks rank and some other fundamental indicators to say, you know what, I've got a bullish bias here. That's all well and good. Still and yet, I've got to be prepared for that 10+% move, or $10 move. And here's where you need to make the decision. Do I want to scale back my investment? Do I want to maybe only risk, 500 shares or 100 shares given the volatility of the stock? Maybe I want to substitute this strategy with an options trade. Or maybe it's just so volatile that because I'm profitable, I want to take my trade off the table. Remember that when a stock reports earnings, there is a good likelihood that it will gap up or gap down. Even when a stock beats earnings, there's no telling that the stock will go up. Just as if, or just in the same case that if a stock misses earnings, there's no guarantee it's going to go down. What you need to take home from all of this is the fact that earnings are potentially volatile events. You need to do your homework and find out the date that they report. You need to find out just how volatile they've been in the past. And you need to look at some of the fundamental characteristics of the stock. Look at how it's valued. Look at the news surrounding the stock. And again, make sure that your thesis is strong if you're going to hold over earnings. The last thing I'm going to do is show you guys a different chart. This is the one we typically look at. This is from TC2000. Again, another free service. And what you might want to do here is just see how wide these Bollinger Bands are right now. You can see they've gotten pretty narrow. which is typical ahead of an earnings report. Stocks tend to sort of get sideways more often than not, and they get prepared for a big breakout. Don't be fooled by the thin or tightly woven Bollinger Bands. They can easily expand in a stock like this to 2 or 3 times their amount. The last thing you definitely want to take a look at, obviously, is where we are in the grand scheme of things. Is the stock overbought? Is it oversold? Are we in a bullish trend? I would say that overall OUTR remains in a bullish trend. But I would say here in the near term we are a little bit overbought. And by looking at this Bollinger Band percentage B down here, you can see that we are nearing the top of its range. So guys, collectively the goal here again is to A, mitigate your risk, B, make sure that you understand just how much risk you're taking, and C, make sure you know your stock extremely well. Understand the fundamentals, look at the technicals, and be sure that you know your risk going into earnings. Guys, I wanted to thank you for watching me today, and please visit our sponsors, firsthourtrading.com. You can sign up for a free 30-day trial, firsthourtrading.com.